Good morning, everyone, and welcome to the European Cross-Sub webinar. And we are seeing the euro a bit weaker in here. We have come off the lows just a little bit, and just bear with me. Look like I'm having some problems with my MacBook, so hold on. And just taking just a real quick overview here. We're still up close to our highs here in the cable. But like I said, with the euro, we have gone and paired back, which I was looking for that to come back yesterday, and it just seemed to take forever and a day to go and come back. We have gone and slid back finally here in the euro, and good little dip in here. And looking at equities, we did go on and also slide back here in equities in the NASDAQ. We had got up to that secondary 161% in the NASDAQ. I'll get to that. Bear with me. So taking a look here on the NASDAQ, you can see that I was looking, had two targets, 261%. So I posted that in the room, and we had made it up to the secondary target, which is 10,643. I think we made it to almost to 10,655 or something like that, almost 10,660, and we've gone and paired back a decent amount here, or not. That from there, it doesn't look like a decent amount, but if you take it on a shorter term basis, take a look at a 5-minute chart. You can see here, and once we got below the same day VWAP, we continued to go and press on that. I did go in and share that in the chat room, but we've continued to go and dip below. Actually, we're holding just above 2-day VWAP here, so finally seeing a pullback in the NASDAQ, and apparently that's gone and impacted the risk on. As we see here with the SPOOs, they've gone and paired back. Not a whole lot, but we actually had made a run up here as the NASDAQ moved higher. And now we're pulling back here. That has certainly gone and impacted the euro, which was trying to break out at the time, and it was interesting yesterday in the sense that it just didn't want to look. It wasn't able to get move higher, but it certainly wasn't breaking down yesterday. And finally, we've seen that finally start to ease back with the weakening of the indices and risk on. And you can see we're still pressing lower here with the euro. Yesterday we were just stuck in this area here. It was frustrating. I got short and we just didn't want to break any lower. Finally, we are starting to now. Obviously with the as we break lower here with the indices weakening. And although it was in a buy mode, I wasn't going to be able to stay short. Ended up my last trade ended up just breaking even, looking for us to go on and sometime during the Asian session move to these lows. But obviously, we're seeing a bigger drag because once again the Nasdaq rallied and now we're starting to slide. So is it a little bit bigger move or the beginning of a little bit bigger move? Henceforth, we're seeing the euro come under some pressure here today. And with that, we'll just go and take a look at the news. Sterling near 3 week highs before government releases spending plans. Sterling held near a 3 week high against the dollar and gained against the euro on Tuesday as investors waited for more details of the government's plans to support the British economy. Chancellor Sunak will make a speech on spending on Wednesday with more measures seeping out since Prime Minister Johnson announced a $5 billion pounds of infrastructure investment 7 days ago. Sunak is considering handing out vouchers of £500 to spend in the sectors of the economy hit hardest by the coronavirus. Prime Minister Johnson's so-called New Deal infrastructure spending was deemed insufficient, and so UK business interests are urging Sunak to be more aggressive, said Brown Brothers. Against the dollar, the pound was lower at 24.75 within striking distance of a June 18th high of 25.68. Despite the pound's gains, investors remain cautious about the currency's outlook, positioning data showing hedge funds increasing their bearish bets on the British pound as the UK and European Union reach out to reach an agreement on Brexit negotiations. And the dollar regains footing as investors eye lockdown risks. The dollar found some traction on Tuesday as risks rising from coronavirus cases offset strong economic data and kept a lid on confidence in economic recovery from the COVID pandemic. Followed by Monday's slide, the greenback was steady on most majors and clung near a 2 week low against a basket of currencies, tracking the mood in equity markets. Aussie dollar pulled back for 1 month high after this country's second most populous state announced 6 weeks stay-at-home restrictions and a lockdown to the city of Melbourne to curb rising cases. The Aussie was unmoved from the Australia Central Bank and held the country's benchmark interest rate at a record 0.25% as expected and said it would maintain its accommodations. And the yield on 10-year treasuries is parked at roughly 7/10 for a month, well below an early June top of 9.590 and more than 100 basis points lower than the way they began the year. If we were to suddenly see signs of sell-off in treasury markets, that could have big implications for the global capital. Since until that point, it's onwards and upwards. And that's going to be about it. As I said, we've taken this dip here. We're kind of holding here or trying to hold. And let's just go and take a look at the economic data. So we did get Italian retail sales, a little bit better improvement there. Year over year, obviously very weak. We do get mortgage rate, UK mortgage rate data, BBA mortgage rate data at 7 a.m. Eastern, and New Zealand dairy auctions. And then coming into the States, pretty quiet until 10 a.m. Eastern, where we get Joel's jobs openings and Canadian data, which is going to be the IVPMI. And let's just go on and get into the analysis at this point. So the euro closed at a daily key level of 1307. Resistance for a breakout with a follow-through momentum will be 1372. Support will be 1232. So we had pointed out this 1337, which they challenged yesterday, and we actually closed above right here at this 1307, but we haven't been able to do anything with it. And yesterday it seemed like it was bound to go much higher. This market wasn't even letting up. I mean, it wasn't moving any higher yesterday, but it refused to let back down and certainly looked like it was bullish. And as I said, I had taken a stab at it a couple of times on the short side. And on my last trade, I ended up just breaking in because this market just refused to go down. And certainly, like I said, with it closing the way it did daily, it was open to move higher. And in Asia, it did just that, especially with the NASDAQ starting to move, return back to its highs. But the NASDAQ hit that secondary 161% and became under pressure. And with that, we began to finally, slide back down here in the euro. We had 1217 yesterday, and we're just, in case we do break a little bit lower here, we're just going to go with the move down here to 1250. At this point, I'm not sure what they're going to go and do at this point because, like I said, quite honestly, it was frustrating yesterday because I got short from a pretty good area here on this run up and short again. And you can see here, this market really wanted to go on and push higher. And once we took a dip, it just refused to go lower. I mean, it's not like as if we're looking at 15-minute charts. These are 2-hour bars. And you can see here, we were just simply not even moving. And then with the close that we had, opened the door for us to move higher. Now, I did think we were going to still pull back. I was talking in the chat room, said, well, I still think we'll still get a pullback. We've even pulled back even further. But once again, you have to look what equities have done. And so after the NASDAQ went back up to those highs, it's actually has the concern that, okay, well, maybe we are going to get a little bit further pullback. And that may open the door for us to move a little bit lower here than the euro. So I would be a little bit patient on that. Overall, it's bullish, but still think that there's room for us to go and go lower here. And resistance will go back to this key level, which is going to be 1337, which we had already before. Moving on to the cable. The cable closed at its best level in 6 days. Upside resistance remains 25.72 with a daily close above 26.02, sparking an upside momentum to 27.50. You can see the importance. We've mentioned that time and time again of 26.02. So if we could get a close above 26.02, this thing would really take off. But before we get there, you got to get to 25.72, which is our resistance. Support remains 23.98. So no changes there here in cable. And for the most part, a lot of these majors didn't even move. Actually, I think in FX, we just didn't see much of a movement across the board overall. Moving into the Aussie, RBA kept rates the same, or held rates. Aussie closed above resistance level of 68.64, opening a challenge to 70.27, which will be resistance. Support is 68.87. So we still haven't moved too much here in the Aussie. We're still relatively quiet, but I have opened this up to potentially challenge up here, but we're just squeezing people. Maybe we'll finally get a bit of a top in here. And as I said, even in the Aussie with the RBA, announcement, still we're just not really moving across on these pairs overall. Pretty much everything pretty much stayed within line. Here's the Kiwi. The squeeze continues. Just another new day, another new high. I should say another new rebound high. Kiwi closed higher, taking out resistance. Next level there is going to be 65.94. You can see we just about got there with support at 65.12. So, I mean, it's just a matter of you just marking up the levels, basically like signposts. Like you can see here, it's just a squeeze, continuous squeeze, higher, 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 higher. Still in tight, relatively tight levels, but you can see how far this market has moved. Look here, I can't imagine probably people that finally got short, and now here we are going back up to challenge these levels. But 65.94 is resistance. And support is 65.12. On to the dollar CAD. No changes in dollar CAD. There was no changes at all whatsoever. Here in dollar CAD, we were looking for potentially a move down here to 35.01. The low yesterday was, let's see, 35.20, and we haven't really done anything on the upside either. High yesterday was 35.63. So you can see here, even with today's high, we're at 35.87. So no real big movements. Well, we did make it here. We are at resistance from that we had deemed from yesterday, which is a 35.87. The only thing we'll do is we'll move it up to the close right there, which that's where we're at. So we had the 35.87. If we can press a little bit higher, potentially we can with these indices peering back a bit. So resistance is going to be right there, which is going to be 36.06. That we will move up to 36.06. Onto the peso. So the dollar peso tagged bias chart support at 22.17. That was our support yesterday. Then closing at 22.32. Support remains 22.17 with a break leading to 21.85. Resistance remains 22.61. So no changes as far as the levels. Well, 22.61 on the upside. Get that. But the 22.17 did hold. You can see right there. And 22.61, which is just right where we're at right now, essentially. It's going to be a resistance. On to the dollar yen. So the dollar yen attempted to rally but fell back on its laurels. Resistance remains 791 with support at 708. And as I mentioned to you, we're just not seeing any changes really here. I mean, we even with the yen who moved up, we're still trading in a relatively quiet range overall. So no changes here in dollar yen. 708, 791. On to the cash dollar index. The dollar index paired back but managed to close slightly above 96.73. Support will be 96.23 with resistance at 97.22. We're kind of pushing here just below 97, but really no changes. So 96.23. If we make that dip, certainly doesn't look like it at this point now. And resistance will be 97.22. And with that, we'll go and move into the cross rates. So in the QEM, we're still continuing to press a little bit higher into this area here, which that's going to be resistance, which is the 70.60. We had 70.52, so one thing is we'll move this up to 70.60. Once again, these Aussie and European crosses, they're just continuing to push a little bit higher, just squeezing people. Anybody that's taking a short here, they're just being squeezed. Not a whole lot, but they're being squeezed. It's not certainly not going their way, just kind of pushing further against them higher, a little bit higher. Each day it's another new high. So once again, actually that came in right where we're at, which is 70. So we do have that 70.52. So that does remain the same. 70.52, which we had. And support we had 69.30. There's not going to be any changes. Like I said, we've just gently squeezed them higher. So bias chart support is going to remain the same. Euro yen did manage to go and punch up a little bit higher here. Finally, we saw a little bit of movement here with the euro yen. We did go in and push higher, but we did, just like the yen, remember it fell back on its laurels with the dollar yen. Resistance is just going to be this high right there, which is going to be 21.82. And you can see support there, 20.75. So we do move the bullish, the bias chart resistance a little bit higher, but support remains the same, 20.75. And we're not moving anywhere. We haven't moved anywhere since Moses crossed the desert here in this euro odd, for the most part. Support still remains the same here at 61.48. And bias chart resistance is the same, 62.68. We are making a little bit of a push here. We'll see whether they can take it out, but it's going to remain the same. No changes. As I mentioned, we're just not seeing much of a we didn't see much action, relatively speaking, in the crosses yesterday. I mean, you can point out one little area here. You can look at some yen crosses, but for the most part, we didn't move a whole lot in any significant way. Look at the euro. Euro's actually breaking lower here. And I was just going to warn that too, is not necessarily on the euro, but I was going to say that be careful. We may break lower here. We're actually seeing volume pick up in the euro. I look at the future, so I have to take a look here. So the euro cash spot is trading at, I can't stand whoever puts on these alarms in here. It really hurts your ears. But we're at 12.75 now in the euro spot. Still pushing lower here. And that was my concern. I was going to say that is that, remember, as I mentioned, I thought we were going to see that yesterday. I thought we would start to see equities come down. And really the one that's the leader right now is the NAS. Not this coming down that much, but it is pressing lower. And I think that might be, I don't want to say spooking the markets, but a little bit concerning because we did make, we reached that 161%. The first one, we fell back. We rallied back, hit the second one. Now we've rallied back and fell a little bit further now. And I think that I think the market, and I'm talking about at least with the euro and probably some of these majors, is vulnerable because they thought that it was going to move higher. And remember, yesterday we didn't, as I told you, we didn't want to break. We're stuck in this range here, and so the market was bullish. Overall, remained bullish. But when we punched up in Asia, I think some people got stuck long and they're being knocked out of their positions right now. That's what I think is happening here. We do have some support here in the futures at 12.93, which trades at a 17 tick premium to the spot. You do the math. go back to the QE. I think some people got stuck long and they're just getting knocked out of their longs here that may have got longs in. Okay, now we're going to break out in the euro. And I myself, I said, look for a dip. Now, this has already dipped much further than what I expected. But don't forget, once again, the because I would have liked to have stayed short yesterday, so I can't deny that overall it's bullish at that time, but I still expected a pullback. So it's pulled back even further, but that's because the NASDAQ is showing that, having that weakness and certainly impacting the indices. Looking here at the Euro QE, bias chart support was 71.54. We are trying to make a hold here. We may finally start to see this hold if indices continue to stay a bit weaker here. So we'll move this to 71.87. We may have a little bit of a bottom in place here. We saw some decent volume come in right here with the euro. I'll just go and shift into that for y'all. You can see here. Some decent volume coming here, as I think some people got knocked out of the box. We are coming into this 1293. Actually, we just came down here and tagged this trend line here. Look at that. So probably a little bit of support coming in right there. Okay, with that, we'll move into the ASEAN. We had a resistance 74.97. We punched up just a little bit above it yesterday. Well, that's going to be a resistance here. And you can see here, we're trading relatively quiet. I mean, this market has been so dead, it's not even funny. We just don't see any real movement. And it's almost laughable because, like I said, this used to be a proxy for the indices. And if it was truly a proxy anymore, we'd be up here in the stratosphere. We'd probably be like around 82. So this market doesn't even move anywhere. 74.97, no changes. 74.97, 73.68, no changes here in the ASEAN. With that, we'll go and move into the guppy. And like I said, I'd be cautious in any moves until we get U.S. cash equities open because, look, the U.S. futures markets is what's moving these markets. Make no bones about it. If you don't think that's happening, that's what's happening. You're fooling yourself. It's U.S. equity futures, or you're just playing U.S. equity markets that are moving these FX markets. and have been for quite some time. But right now, like I said, we'll just take just a quick overview, real quick, on those FX futures, and as I mentioned with the indices, and we could start to see the beginning of a better pullback. And I think yesterday we may have suckered some people into some longs. I think they're coming out of there. I mean, they got knocked out of them, but we could see a little bit further damage here. Looking at the guppy, no changes. 35.29. You can see with 34.39, and that might even be a little bit of a stretch, but we had a little bit better strength yesterday. So we'll give it that. 35.29. Lowest 33.26. We can move that up to 33.35. That's not much, but that's moved that up too. And lastly, sterling on. You can see how the 78.60 is held twice. That's going to still remain. And the upside is going to be 80.05. We may be able to make a turn now. We could actually punch up a little bit higher today with the way we're seeing equities potentially work lower. We'll go to 80.43, 80.43. And I wouldn't be surprised to see that challenged and taken out, but that'll be resistance. That's going to go on and cover FX. As I mentioned here with the NASDAQ, I posted this a couple of times in the chat room as well as on Twitter. We had these two 161% targets. We tagged the one in the, yesterday, and we came back. Doesn't seem like it's a lot, but look how far NASDAQ has gone. And then we tagged the secondary one in Asia. And if you look here, after tagging the first one, decent little dip, rallied up to the next secondary support, and here we are pairing back. I think it spooked the market a bit, not a whole lot, but if you look here in the SPOOs, same thing. They went to new highs in Asia, and then they've gone and pulled back. So is this, even on a 30-minute EMA, we've got a sell signal. So will we start to see a little bit more follow through? And I think that's the concern here. Right here. And as I mentioned, we saw that rally yesterday. It might be easier to see it on a 30-minute. And actually, here's what I was looking at yesterday. So we got into that. This is the daily, and we have that zone here on the daily, and I had a high of 1345. That also happened to confluence. I think it was on the 2-hour chart. Yeah, right here. You can see here this 1351. We had 1343 was key. So you can see here where the market came here, and I mean, we just weren't even doing anything yesterday. Look at that. It was just so tight. And once again, you would think this was a 5-minute chart. And look, this was a 2-hour chart, and these markets weren't moving. So the way it was finishing the day, you had to respect that we had gotten above this trend line and we're holding. You see what I'm saying? So we had the opportunity, although I thought we would still pair back. I thought we were going to still pair back, but I couldn't stay short because the way the market was closing. We'd gotten above the trend line. We're holding pretty steady. And certainly in Asia, they turned around and pressed it up in here. And then, since then we started pairing back here. But the potential is that, and we are holding at this trend line on this pullback, but the potential is we could maybe pull back a little bit further. And I think that people may have got stuck or trapped on their longs that may have said, okay, now we're definitely going to go move higher. We're on our way. We're breaking higher. And my thought yesterday, and that was the reason for me taking shorts up here, was I thought, okay, I think we can now pair back. I think these indices can pair back. But the NASDAQ pushed higher, then came back, paired back a bit, and then finished the day strong. And with that, I think a lot of people may have stepped in and either got long or retained their longs in this euro, looking for a better move. And now here we are pulling back. And I think this has to do with the indices. Now, will we see a bit further move lower in the indices? That's a $64,000 question. It could end up pulling us back down here. That's what I'm saying is be cautious coming in. Although we did see some real good volume, I think we skunked some people out of their longs here. Those that may have got long finally got skunked out here because you're looking at, about 2,000, about 20, maybe 2,000 contracts traded on this move down right here, just here. So pretty decent move here, and that confluence is right here with the touch on this trend line. So maybe we can now try and make a stand to hold here, but I would still think that we'd be vulnerable. So if we do see a better pullback in equities, we could open the door for this to move a bit lower here. And take a look in here at the cable. Just like when it was just as if it was looking itself as if it was going to break out a bit here. You can see we've come back down here. Dollar CAD. Well, not dollar CAD, but the Canadian currency is weakening. So dollar CAD obviously strengthening. And so dollar CAD should be on its highs, which it is at 35.86. Yen. Dollar yen on its highs at 767. Obviously, the yen itself weakening. And gold, I was just going to say a bit vulnerable, and sure enough, we're punching over here. So I would be a bit cautious in here. With you can see here the euro. You probably think, oh, this is a good area. Now you can come in, and you can see if you did, you're only up probably about 2 ticks at this point if you're trading the futures or, and the spot is at 1275. Like I said, we're essentially trading a 16, 17 tick premium. So do the math. But I still think that we're potentially vulnerable here, that we could still weaken, even though it came down to this area. Maybe we do hold, but once again, if we see a further pullback in equities, you can see this rotate lower. And then looking back in hindsight, then people are going to go and say, well, we came, which that's what I was looking at. Well, we came into that zone here. That's where they ran out. Yeah, in hindsight, they're all right. But like I said, I'll move down in here. Potentially we can come back further. Looking here. Really 1237. You're talking close to another 60 ticks, which would then drop us down to about 1220, 1219 in the spot. I'm not saying we're going to go there immediately. I'm just saying is that I would be a bit cautious in here, depending on what indices do. They're actually the ones driving the bus at this point. And not only that is, I think that yesterday we got some longs trapped, and either came in and now they're trapped. And I'm not saying they've all all have left the arena, but I think some are kind of stuck and open to being tested. I would look for this potentially this 1280 to be tagged in here. So you come in a little bit too early, you're just going to be stuck in some longs and probably kicking yourself, thinking you should have probably gone and waited. And like I said, potentially we could come all the way down here. Potentially, probably would want to wait somewhere in between. Probably the earliest potentially we could get down to is 1267. Potentially, if we see the indices come back down, that'd probably be an area right here. You can see that right in here. 1267's confluence in here right there with this high here, these two highs here. So potentially we can come back down even lower if we see indices run into some further trouble or come into trouble. They're not really in trouble, but I'm saying if they see a better pullback. My thought was yesterday was, because as I mentioned in the chat room, but I don't think many people were there at that time. I was just like, well, you know what? We got past end of month, end of quarter, end of half year. Now we can probably see a little bit of a pullback, and we did see a little bit of that, but then the NAS came back strong to finish the session, and then we went up higher in Asia, but here we are pulling back again. So anyway, that's all we have. Thanks for joining us here on the European Crossover. We'll see you in the chat room.